Hey, good afternoon, everyone. This is Coach Chris coming at you Friday afternoon at 2:30 p.m. Central Time on Friday, May 16th, 2025. Was trading today and things were just real choppy. I am up green on most of my accounts, but at 2:30 on a Friday, I've learned just stay away because with options expiration on Friday, the market makers can really manipulate things very quickly, and you can see a lot of reversals and a lot of things happening that don't normally happen right at the last time. And there's nothing worse than going into a weekend having a crappy day on Friday, at least for me, because you sit and stew about it all weekend, and then Monday morning you're going to right away correct it, and you jump in and you get too overconfident, and it's just not not a good deal, at least not for me. But I wanted to show you guys something. I was messing around with the charts a little this morning. What I have on my screen here is a 15-minute chart of the futures MNQ, the Nasdaq 100 basically, but it's the micros with the June expiration. And I want to go back to Wednesday. So I don't know if you remember, the market had been down, and all of a sudden we had this huge bullish trend regarding some positive economic news on interest rates and on the tariffs. Some of the tariffs were settled with China. And so we had a huge uptick. And on Wednesday, we hit a new high from like February or March right here on this candle. Let me just see if I can get an arrow right here. On this candle right here, we hit a high. And that was at around 21,420. Okay, and I don't know if you can see where that wick goes right there. Well, I didn't think about it too much at the time. I had a line drawn because when we set a new swing high, I normally just click a line on it just to remind me. So there's something interesting though that I observed, and I just want you to so this was at 11:30 Central Time on Wednesday, May 25th. So 3 days ago. Okay, so it got up into that area. You can see here how earlier in the day we were approaching it. Now, when you draw a line for one of these levels, you can see here how I've done that. Like here's a swing high. So I had a line like that there. Now remember, when we click a line like that, that doesn't mean that's an exact point on the chart. Yeah, it did hit that at that point, but it's a level. And so plus or minus 5, 10, 15, 20 points around that is really an area of interest, okay? Because even though it sometimes respects things to a point, you'll see this like on a fair value gap, or at VWAP, it'll sometimes come within 1-2 ticks, and then it will do the reversal. And you always wonder, well, why is that? Well, technical analysis is not that perfect always where it will go to the exact tick. It's an area. And so plus or minus 5, 10 points is really what we're looking at. So you can see here the market came up, wicked up, set a new swing high. It then pulled back, and you can see here, see how these wicks are going down? They're trying to suck up liquidity, but the sellers aren't strong enough. They sell it down, but then it gets into this region here, and it bounces right back up. But look at where it's bouncing back up to. This area right here where we had just set that swing high. What did I say? So it's around 418, 21,418. And so we come up. This is a 15-minute chart, remember. Almost got into that area pullback, came up, and look at how it respected that area. It didn't even wick into it. And then the market closes right here on Wednesday. We had a gap down overnight, And then overnight, what is this? Just 1:30? No, wait, 9:30 at night. It came up and look at it again. So you see how I'm saying this is an area. You know, it came up and it got up to 412 within 6 points, but it just there's like a wall here. Okay, it just did not have a power, and so it was chopping around in this general range here. And then finally on this candle here, we had a bigger pull down. Went down, got some liquidity. This is at 4 in the morning. And then the next morning, the market opened right in this area. And look at what this did. It was like the thing was shot out of a cannon. This wick probed into that range, and then it pulled back, picked up the liquidity, got to the very, very tip of that, but could not break through. Then we had this reversal candle, and look at this reversal candle once. It goes exactly to the bottom of that range, okay? Now, when I drew this range here, I draw a midpoint, because that midpoint is often respected as well. You can see here how this candle got up almost to the midpoint, rejected down, top, bottom, and then here we're in the middle, and finally this pinned through it, pulled back, came, this candle could not break through, this candle wicked down, and then we finally went up. This is on Thursday now, and we set a new high up here at 530. But watch what happens. We come down, and look where that candle closed, right exactly to the tick. And then this one pulled down again, and then we had a reversal to the top. Did not have a pop. This has got to be a real strong area, either with a lot of resting orders or they're just defending it. Rejection, got up to the midpoint. See how I explained how these midpoints also were important? And then we get this other rejection right back into this pocket of liquidity here. And then they make another run at it. They get up here. They penetrate into that range just a little bit this time. They go back up to the tick and still cannot do it. Pulls back, picks up liquidity, cannot even pierce that range. Halfway rejection. And just look at how this range is being respected. It's really kind of crazy. I mean, look at how that back cannot get through, finally gets through. This time it does not get back up into this 30 range, which was the swing high, rejection. Now this is today, Friday, 7:30, rejection to the midway point, another attempt, and then we had a complete rejection. And look at how this is respected, crazy. And then down to this level again. I'm just going to snap a cross here, there, or a line rather. I mean, look at this. So, yes, the market is random, but at times, if the conditions are correct, it will follow these technical spots again and again. Now, in a week or two, are these still going to be valid? Probably not. They'll probably have moved on and they'll do another area. A lot will depend on what happens early in the week. Do we have any financial news, any tariff news, whether this can be broken to the upside or whether they need to come back down. If we've come up too high too fast, they may have to come back down and set another range like this, gather some steam and liquidity down below, and then make another run at it. So you can see here, came back down, got the liquidity. Look at that candle. What a sell-off there. That is let's just measure that. That's a 100-point candle, just to give you an idea. And that happened an hour after the open at 9:30 a.m. We had a huge sell-off. This candle retraced about 75% of it. It got halfway up this channel, pulled back down exactly to the base. I mean, this is insane how this area is being respected. Got up very similar to what we had back here. Where was it? Right here. Look at this price action here, how it's consolidating here, trying to build up enough liquidity to break out. Same thing happens here, blah blah blah. Consolidation, breaks out, retests all the way back down to the middle, and finally broke above here to the '08 range, but it did not have enough steam. And now as we go into the close, it's what is it, 2:43 in the afternoon. You can see it's kind of selling down a little bit. I will bet that it will either close here somewhere. I would say probably in this range we will close for the week. Really crazy stuff. Very, very crazy stuff. So just thought that was interesting. You can see how the market does respect at times certain levels, and this is a prime example where for the last 3 days, this area here has been a key level of either reversing or using that as an area to move to the next level higher. So have a great weekend, everyone. Hope you had a good week of trading. Spend a little bit of time over the weekend, look at the charts, and don't be in such a hurry Monday morning to get trading. Let the market, watch the overnight action, trade that a little bit because it's a little bit more forgiving, a little slower moving. And then just be cautious at the open because there'll be a lot of orders and a lot of information can be gathered. I would highly recommend on a Monday morning, don't trade the first 15 minutes of it. You can try scalping it. That's up to you if you're an experienced trader. But I would just let it settle in. Wait until about 15 minutes after the open when you have some information, and then start to look and see what kind of trades are presenting themselves that will fit your setup. So thanks for watching, everyone. If you enjoyed watching the video, please hit the like and subscribe button. I would really appreciate it. Working on some big things. Hopefully we'll have some of them available very soon. But as you know, testing. I'm not going to release something or introduce something that hasn't been proven. Not just with back testing data or market replay data. No, I actually put it through its paces and test it physically with actual trades, either in a sim environment, a funded sim environment, something similar to that, to make sure. And over time, I'm not going to trade it for a week and say, oh yeah, this is ready to go. No, it's gotta be 30 plus trades. Easily just to prove that it appears to be working. So have a great weekend, everyone. Thanks for watching.